Hello, everyone, and welcome to this edition of Investing with Confidence. I am your host, Joshua David, as always, and we are happy to have you with us today. I do have my good friend, my good pal, the mastermind of this whole operation, Mr. Al Connickson. Al, how are you doing today?
Once again, I am feeling very good, Josh. How about you?
I'm feeling good. We had a great week. It's good. It's great.
Yeah,
it's
fun,
awesome.
Fun week.
It's fun week. Earnings week in the stock market this week. Obviously, some big players are doing earnings this week. Bank of America Monday. Netflix hammered on Tuesday.
Big time.
Johnson & Johnson on Tuesday. Tesla Wednesday. Thursday, AT&T Friday. Good old Verizon. So we had some great earnings calls this week. Netflix getting hammered. We know what happened with Tesla. We had a rebound in the stock market on Tuesday, and Wednesday opened up a little bit higher. So we're showing a lot of volatility in this market. We know what happened Thursday and Friday. Great moves this week, especially after some earnings. But our sponsor, Online Trading Academy, on their 25th year, teaching people just like you how to trade and invest with the stock market. Also other markets as well. Futures, Forex, options, cryptocurrency, whatever that flavor of the day, our sponsor, Online Trading Academy, has techniques and strategies on how to take advantage of these markets and do that with confidence. With some of these big moves this week, earnings calls and everything, what do you see happening moving forward in the next couple weeks?
Well, we always look for earnings season as being an opportunity, presenting some opportunities if you know the right strategies. And there are specific strategies that you can use that are phenomenal during earnings season. And I've said this for some time now, because of the high valuation of the market and the high valuation of some of these stocks, if there's a blip at all, they're going to get hammered and they get spanked. And that's what happened. Netflix, for example, was down. It opened on Wednesday, I think it was down about 30%, down over $112 a share. That's per share. That's painful if you happen to be holding a big position in a stock like that.
It was actually at $347, opened up in the morning at $243. Crazy move.
Yeah. And we see these big moves, and just when people start thinking, because on Tuesday the Dow was up 500 points. I'm sure people were thinking, oh, everything is fine now. We're in great shape. And the interesting thing is that one of the reasons the market was up, and this is one of those things that you can look back at history and you can see how the market is impacted by certain things. What happened on Monday? Monday, the 18th, was tax day. Your taxes were due. And typically what happens the day after taxes are paid, the market goes up. And that's kind of what happened on Tuesday. But let's look at what's going on. The IMF, the International Monetary Fund, just cut its global GDP forecast, gross domestic product forecast, cut it from 4.4% down to 3.6%. So they're seeing pressure on global economies. We still have rising inflation. China is now shutting down some of their cities because they're having a huge COVID outbreak. We still have that supply-demand imbalance. Supply chain issues are still there. The Fed's changing monetary policy, and the Ukraine-Russian war is just going to supercharge things. So what the bottom line here is that we're going to have these volatile periods, which are great periods if you know how to take advantage of what the market's presenting. And I think right now, Josh, is maybe the most important time that you're going to see to become financially literate and not wait for, people always say, I have to wait for the right time. It's not the right time.
It's never the right time.
There is never a right time.
There's always an excuse for something.
Yeah, and that can really be harmful to your financial future. So look at what's happening. We have extremely high equity ownership by the public. And typically, almost always, that precedes a market correction or bear market. We always see high equity ownership at that peak. Vanguard even the other day came out with something saying that a high percentage of their retirees and their seniors have 98% of their money in the stock market, which probably means that they're taking on more risk than they should.
Yeah.
And what we're seeing, the public typically follows a Wall Street strategy. They call it buy and hold. I'm going to call it toss and stick or rising tide investing. And basically it's just tossing your money at the market, hoping that it sticks on something that goes up And when you have a record bull market, that's what's been happening. The rising tide mentality, that's a rising tide, rises or floats all boats. That's not going to happen going forward. We've kind of been conditioned, kind of a false sense of security in believing that all of the components of the market are going to keep going up. But remember, we're now saying goodbye to an old friend, which is quantitative easing,
Yep.
and we're saying hello to a potentially new enemy, which is quantitative tightening.
Correct. Yeah, there's a lot going on right now, Al. We have that going on. We have earnings seasons going on again. I mean, that's always a great mover. But we're seeing a change in the financial markets, and I think a lot of our listeners are seeing that as well. But they're just not sure how to take it, what to do with it. And you actually teach investing classes locally here in Bloomington, Minnesota, Atlanta, Georgia, and Denver, Colorado. What can people expect to learn when they come to these investing classes?
Well, they learn how the market functions. Why does the market go up at some points in time? Why does it go down? What's really important? Is it really concentrating on the fundamentals of a company or the market, or is it really just identifying what moves the price of something?
Yeah.
And that is the key. One of the problems, and we really cover this, is that most people trade subjectively. In other words, they use their own opinions. They think the market should do something based on their bias.
Yep.
But that's not the way to do it. You have to be able to trade objectively. If you don't, you're assuming that you're smarter than the market.
Yep.
And I can guarantee you that none of us are smarter than the market.
Yeah, and these classes locally here in Denver and Bloomington and Atlanta, what type of people come to these classes?
We see just about everybody you can think of, Josh. We have people that are under 20 in their teens. We have students that are in their 90s and everything in between. Some people have experience in the market and they're not happy with their returns. And some people that have traded are not doing very well. They're not very consistent. They want to learn how to do that. Some people have no experience at all. I'd say that's probably the primary group of people we see.
Yep.
And some people are in retirement or going into retirement. They're scared to death that the next 20, 30, 40 years, their money is going to run out.
Yeah, and the key is, as you were talking about a little bit earlier, is to minimize risk in the markets. As you mentioned, I forget what broker it was, but they're in mostly equities, or they're almost 100% invested in the markets. That's risky.
Correct.
What we teach at Online Trading Academy, the sponsor of the show, is how to minimize risk in the market and trade and invest with confidence the right way. If you want to learn more about that, Al, we have investing classes here locally in Denver, Bloomington, and Atlanta. And these are classes where we've taught thousands, just like you, our many strategies which are designed to teach you to make better investing decisions. So call right now for 2 tickets. Call 888-682-6466 for this investing class. That's 888-682-6466. You can also text the word invest to the number 484848. More Stock Talk coming up next. We'll be right back.